Welcome back to the Williams Real Estate Channel. I'm your host, Geordie Williams. Today we are discussing the buyer's agent boom that's been happening the last couple of years, what you need to know. But before we dig into that, we will look back at history, as if you study history, the further back you go, the better you will be able to understand the present and the future, because history doesn't repeat, but it definitely rhymes. So if you study your history, you can understand what can potentially be happening in the years ahead. So with that said, we'll kick it off firstly by discussing the key moments in time where there was brokerage booms. In the 1920s, there was a massive stock broker boom. The Roaring Twenties, it was called. Every soul was buying and selling stocks and pushing stocks. It was the next best thing. Everyone was making money. The markets were booming into the late 1920s. But come 1929, it all ended in tears with the 1929 crash, which led into the 1930s Great Depression. Now, I'm not saying we're going to head through a 1930s-like depression, but yes, we are on the cusp of the next downturn. Governments around the world have learnt their lesson from the 1930s, where they did not stimulate the economy by way of dropping interest rates low, quickly, as well as producing new money supply, such as printing money, which is what they do these days. The government these days, during a downturn, drops interest rates very low and prints a lot of money, which kicks the can down the road, inflates asset prices such as property, stocks, commodities. And we don't typically see the likes of the 1930s Great Depression, as they basically let the market run its course rather than stimulating it with interest rates and dropping interest rates and printing a lot of money. But that's what we can learn from history. There was a big stock brokerage boom. Everyone was a genius and everyone was making money in the Roaring Twenties, and it all ended up in tears in the 1930s, one of the biggest crashes in history. We can take it forward to the 1980s again. We had a big stock brokerage boom. Wall Street, the rise of Wall Street, where regulation was relaxed in the years where Ronald Reagan was president in the US. That ultimately filtered around the world, set off a massive boom in the mid-late 80s. But and also during the 1980s was another insurance brokerage boom. So big explosion of a new industry. Insurance brokers were new on the scene in the late 80s. But when the market turned into the 90 and 91 recession we had to have, which was famously marked by Paul Keating in the 1990s when the recession hit, it pretty much wiped out the whole industry in terms of insurance brokers and a lot of the stockbrokers as well, as larger companies bought out smaller firms. Smaller one-man band type of people went under, and the whole industry was consolidated in the 90s and throughout the 2000s. And these days, insurance broking and stockbroking isn't as large as it was back in the 80s. Fast forward to the 2000s, we then saw a massive boom in mortgage broking, where a lot of brokers became independent away from the banks, started a lot of loose lending in the 2000s, the big lead up to the 2007 peak prior to the global financial crisis. But again, in the 2008 crash, it took out a lot of the mortgage brokers and even the larger companies such as Lehman Brothers went under. And again, that industry was consolidated in 2008 when the subprime mortgage crisis set in, and a lot of the loans that were being drawn up at the time by these mortgage brokers didn't actually have solid security and or people behind them with jobs paying for them. So that was a collapse of the 2008 crisis. Fast forward to today, we are now in the 2000s, 2020s, that is. We have the buyer's agent boom, which is essentially another brokerage industry exploding the last few years. Similar concepts in terms of a broker. It's a similar business structure setup. So buyers beware, because if you study history, if you can see how there's been moments in time where we've had the stock brokers boom, we had mortgage brokers boom, insurance brokers boom. It only takes the market to go through a significant downturn, which will happen in the coming years. And a lot of the brokers that, or the buyer's agents who are brokers that are bursting onto the scene these days will get taken out with the wash. So how I see it happening, I mean, I operate as a buyer's agent, but I've come from construction and property industry, built my own portfolio. I look at property through an investment lens based off the 18-year land cycle and through a development lens. A lot of the buyer's agents these days are coming from IT, coming from other corporate backgrounds, coming from multiple different landscapes and industries that are not necessarily property driven. That's okay if you want to use a buyer's agent to go and buy a family home and it's a more of an emotional buy, that's fine. But not if you're getting into buying something for an investment purpose. If you're looking to invest in property, you need to make sure that the buyer's agent actually has the skills and the knowledge and the experience in investing in property themselves, because essentially it is an more or less unregulated market currently. The buyer's agent firm, especially in the buying investment grade stock. And how I see this all panning out, if you study history, once the market turns, it'll take a lot of these punters out, because they're pushing markets now, such as Brisbane, because of the Olympic Games, and it's booming, and Perth and Adelaide, because those markets are booming, and even the likes of, say, Townsville, because they're booming, and it's all over slapped over the news, the media, everyone's talking about it. But what happens is during the tail end of booms, a lot of the mainstream gets sucked in with fear of missing out. And then now we've got this explosion of buyer's agents pushing all this stock, pushing people into these markets, where we are definitely not advising clients to go anywhere near Brisbane, Perth, Adelaide, and the regions at this time, because they've had their time in the sun. When you buy property, you are buying the future growth, not what has been historically. So that is a key lesson to learn from history, is that these markets that are booming are not going to be the performing markets in 5-10 years time. They will have another couple of years worth of growth, but once the market turns come 2027, 2028, they will go backwards. And if you continue to keep buying in these markets, you will find yourself in negative equity quick smart. And then if the banks get wobbly on you and they want you to pay down debt and you don't have the cash, they'll be selling the asset before you know it. So buyers beware. Make sure that if you're going to use a broker, a buyer's agent, to help you buy an investment property, firstly, understand, do they actually have a portfolio, or are they just pushing stock for a developer, or are they just new to the scene and just trying a new job because it's the flavor of the month? Or have they been doing this for a number of years, building their own portfolio with skin in the game and understand these market cycles and the 18-year land cycle? I can guarantee if they're pushing Brisbane, Perth, Adelaide, and the regions such as Townsville, they do not know what they're doing, and they're only going to get yourself and themselves caught out when the market turns. So how I know this, or how I believe this is the 18-year land cycle. This is history. I use this 18-year land cycle as a framework to work out where we sit in the market, being right now we sit on the blue marker, equivalent point of time, 2005, 2006. 18 months away, give or take, from peak market. Come 2027, you'll know about it. The whole media market mainstream will know about that we've entered the next downturn in 2027, 2028. And the Brisbane, Perth, Adelaide, and the regions in regional Queensland, regional WA, the Townsvilles, the Northern Territory, Darwin, all those markets will be humming and be pumping the next year or two or three. But once the land-driven downturn sets in 2028, 29, 30, those markets are going to get hammered. Because if you look at the sales data, similar point of time from 2005, 6, 7, and 8, those markets did well. But then when the market turned, come 2007, 2008, they went backwards for many years. So this is why we are not buying property in those markets, even though a lot of the mainstream herd are rushing in with the fear of missing out. It always happens. This time of the cycle, when the markets boom and everyone hears about it, and now we've got all the buyers agents pushing these markets, they rush into the tail end of the boom and they end up learning the hard way. So buyers beware. We are only focusing now on Sydney and Melbourne in certain products, in certain pockets, in certain suburbs, not everything, not all stock. So if you want help, reach out. We can definitely help you build a large sustainable portfolio and navigate the turbulent times ahead, because it is not the hot, overheated, booming markets that you want to get into. It is the more suppressed markets. And this is a snapshot. I run a monthly market update where I show the framework of the 18-year land cycle. I then show historical sales data in units and houses across Australia to visualize where those markets have been historically, how they are performing now, so then we can paint a picture of where they are heading in the years ahead. And this is a summary snapshot of where I feel the markets are sitting right now, based off Q1, Q2, 2025. And we have, as you're already aware, Adelaide and Brisbane, regional Queensland, Perth, absolutely going through gangbusters, fear of missing out. That's where all the stupid money, I like to call it, is flowing into now. And all the buyers agents that don't know this type of information are pushing people into these markets, which is very dangerous. When markets start to get all euphoric and everything's flying out the door, and they use metrics like days on market, everything's selling within a week or 2 or 3 days, that is not the best time to buy. If you have to buy in an auction, that is not you've already got the market wrong. I've bought hundreds of properties for myself and clients, and I've never bought one at an auction. If you're buying at an auction, you're buying in the wrong market. Auctions are designed to create emotion between buyers to drive top dollar, and they are only really most effective when a market is booming and going through the final couple of years of heat. They don't work in suppressed markets, in stagnant markets. So I never buy into booming markets. You want to get in before the market takes off and goes through that boom. As we were buying a lot up around Brisbane and regional Queensland between 2018 to 2022, now we've got assets there. We're adding value. Good time to add value by renovation, subdivision, development. Great time to add value to your stock while it goes through the heat, but not to keep acquiring assets in overheated markets, because you'll overpay, pay a premium, you'll then buy peak market and you hold it for many years with next to no growth, because typically markets go through 10 years of stagnant, flat growth on average, sometimes less in more diversified economies, sometimes longer in less diversified economies such as Brisbane and Perth. but on average 10 years of stagnant growth, and then they hook through a growth cycle which can last between 5 to 7 years where they go up to 180% from trough to peak if you can time it right. They then top out, soften by 20 or 30, 40%, depending on which market, and then they'll go through another 10 or so years of stagnant growth. So that is why we like to get into markets after 7, 8, 9 years of stagnant growth, because it's any time where they can hook through a growth cycle. We don't get into markets once they've already halfway through a growth cycle. We're on to the next market. We're always 2 or 3 years ahead of the mainstream herd. And this is how we see the markets right now. Obviously, the mainstream are piling into all the fear of missing out and the stupid money's pouring in. Even buyers agents are pushing these markets, which is just crazy. But that is history. History shows us that brokers come along, they don't necessarily know what they're doing. They're trying a new industry, such as what happened in the 1920s with the stock brokers, in the 1980s with the stockbrokers and the insurance brokers, and in the 2000 with the mortgage brokers. But when the market turns, it will consolidate the whole industry and will wipe out a lot of the punters, will reset. And then the people that actually study the markets and have skin in the game and understand how the property cycles work will be the long-term players in the game, but not the quick flick shiny people that come and go. That they tend to come and go. So buyers beware. I cannot stress it enough. Do not get carried away with the herd, even if people are pushing you into these markets. I've been helping many people recently who have bought into, Brisbane and Perth recently, peak market, even new and off the plan house and land packages stuff. That is the worst to buy a overheated market, brand spanking new off the plan. You will be in negative equity within the next 5 to 10 years. So buyers beware. Only buy established stuff in suppressed markets. We have regional New South Wales, regional Victoria hit their peak in 2022 and now softening. Sydney, Melbourne are softening and primed for their next growth run. If you need help, reach out. I'll put my details in the comments below. All the best with your investment journey. Remember to like, subscribe, share this content with anyone you think would see of value of it, and think twice before you use a buyer's agent. Ask them the questions. Do you have a property portfolio? Are you invested into this market? Who's paying you? Do you know the 18-year land cycle? If they can't answer those questions, I would not use them. Until next time, thanks for watching. See you on the next one.